This podcast is brought to you by Deepbridge Capital LLP. Deepbridge is authorised and regulated by the Financial Conduct Authority. Please note that investments discussed are both illiquid and high risk and won't be suitable for all investors and should be considered as part of a diversified portfolio. The content of this podcast should not be construed as financial or taxation advice. We recommend investors seek appropriate professional financial advice. Any views expressed may no longer be current and may have already been acted upon. Welcome to this Deepbridge Discovery Podcast. My name's Andrew Aldridge. I'm partner and head of marketing at Deepbridge Capital. The aim of these podcasts is to bring to life the people and the companies behind Deepbridge Capital. I'm delighted to be joined today by Ian Warwick, managing partner and founder at Deepbridge Capital. Hi Ian, thanks for joining us.
Morning, Andrew.
Could you start off by telling us a bit about your background and kind of what led to forming Deepbridge, I guess?
Yeah, so initially I spent a number of years in the Royal Navy, followed by which I went back to college and then became an oil field engineer, mostly up in Aberdeen. That took me out to Houston, Texas. I spent 5 years in Houston. Those old enough to remember would know that oil prices dropped to about $7 a barrel. Which
Slightly different to today.
Yeah, a little bit different from today. And I ended up changing career and moving into advertising and ultimately worked with the Houston Rockets NBA basketball team doing all their arena signage.
Cool.
That then took me back to the UK and I got involved in the print industry, working my way up to a sales director of one of Europe's largest printers. And whilst doing that, I spotted an opportunity. I think you remember in those days that if anybody understands print, everything used to go around on motorbikes back to the ad agency, and it was all crazy. And I said, this is lunacy in this current development of digital technologies. So I set up one of the first companies to manage and control the movement of digital assets. We took that to NASDAQ a number of years later, and then we sold that. Then kind of leading towards more what I do today is I got involved with a group of small cap fund managers in New York, and I would work with some of their investee companies and help them to scale their businesses.
And were they largely tech businesses? Or
yeah, they were all tech, primarily software driven. Certainly the last company I was involved in was an enterprise resource planning software company, UK, US based, NASDAQ listed, worked in the automotive aftermarket, so managed and controlled the movements of car parts and tyres. Doesn't sound that interesting, but actually it was. But it was a substantial turnaround. Yep. Company was not in a good place when I got there. 26 companies in group, 2 different development teams, one in the UK, one in the US, developing the same product but in a different way. Sure. It was all a bit crazy. So one of those scenarios where the more you got involved, the more you had to sort it out.
The deeper you dug, the more you found.
Yeah. And the longer you stayed there, the more you became associated with the problems. Sure. So therefore you had to fix the problems, which is what we did. So that was a 5-year turnaround, delisting from NASDAQ, a spin out, spun out all the key assets of value. 11 months working hand in glove with the SEC to facilitate that. Took the shares from just around about 3 cents. Did a rights issue at 6. I left when it was $1.60. Lots of happy people. Yep. But if people had stayed in, then the company ultimately sold for $12.34 a share. So it was a good turnaround. Yeah,
absolutely. And then after that was then coming back to UK and
Deepbridge.
Yeah,
I think the main problem at that time for me was a personal problem in that I was commuting to New York and whilst I didn't realise how exhausted I was, yep. And I had a young family and didn't really see much of the family. When I did see them, I was grumpy. So really, once that job completed and I'd done what I was required to do for the turnaround, there were other opportunities, but they were on the west coast of the States, and there was just no way I was capable of doing that. And my family in the UK were not prepared to move, and I understand that. Nor did I want them to. Yep. So it was just really a seminal moment where I looked at all those past experience that I'd had, all the knowledge and the turnaround, the building tech companies, the listing companies, and I just said, how can I use that skill set? Yep. And the concept came together of having, rather than working in one company, it was to provide those skill sets into a number of companies, and that's really how Deepbridge came about.
And I guess it's those contacts, those networks you build up over time, and I guess that's still imperative to what we do at Deepbridge today.
Yeah, look, we may be based in Chester as a primary location, but we are a global business. We have contacts right across the planet, and those contacts are still very useful to us today, and we still use them. And as we get bigger and we expand what we do, they're becoming more relevant.
Yep, absolutely. And I think kind of talking about growth and things, obviously, you formed Deepbridge back in 2010, 12 years in, seen significant growth over that time. I think, since founding, there's now 58 members in the team. We've got well over £200 million worth of funds that we've deployed into early stage businesses. Can you just tell us a bit about that kind of growth and kind of what you've witnessed and seen over that time?
Yeah, it's been a great journey. Very difficult at times. Certainly when we came into this marketplace, I mean, I think everybody's plainly aware that I'd never even heard of EIS when we started.
Absolutely.
We built an offshore fund structure to start, but I think we were a little bit guilty at that time of trying to run before we learned to walk.
Yep.
But certainly when I was introduced to EIS by Ray Eugeni, who now works here, I remember getting home and just spending all night just on the internet looking at EIS, and it was almost like a revelation. If we were going to do what we're going to do, then why would you not use EIS?
Absolutely.
I think my defining moment in EIS was really when I looked at it, and it was really hard to find out information.
Yep.
And having worked under SEC rules for so many years, I felt there was an incredible lack of transparency in the industry.
Yep.
And so I set about redefining how EIS should look to the investor, primarily the investor. But look, it was hard work. A lot of long hours. There's no substitute for hard work. A lot of long hours traveling the country, meeting IFAs. We made a conscious decision to go after the retail market.
Yep.
Which is what we did.
Absolutely.
And that's paid great dividends.
Yeah, and I think you talk about that transparency, and I remember certainly in my early days kind of working with you, and we were, I think there's greater transparency in the market now than there's ever been.
Absolutely.
And I think when we first started, there was a lack of understanding about what a growth EIS looked like and how that should be reviewed and reported on, etc. So it's been great to see that journey, and I know kind of that's been something close to your heart, kind of making sure that people were aware of that. So I guess kind of what have been your key highlights then, or what kind of 2 or 3 things have really stood out that you've kind of gone, actually, that's been particularly good.
I think if you look at our group of initial investee companies that were selected by myself and Kieran O'Gorman.
Yep.
And seeing those companies reach a substantial level of maturity, and some people say, well, you haven't exited them yet, but we will exit them when they're good and ready to be exited.
Yep.
But these companies have grown substantially, with great progress with algicites, which, test tubes on a desk when we started, just about to spend 54 million building a factory in Germany. So, that's exciting.
Absolutely.
That's what gets me excited. I think that's a significant moment. I think in terms of EIS itself, a significant moment for us and a real seminal moment for Deepbridge was when the government changed the rules to guide people into ultimately, if you're getting tax relief, you should take some risk. And if you want to be successful, you have to take risk.
Yep.
So when the government changed the rules to knowledge intensive, then that was a very good day for Deepbridge.
Absolutely, and I think as a market as a whole, that was a seminal moment in terms of, I guess from an advisor and investor perspective, probably bring more trust to the market in the sense that actually maybe previously there wasn't that kind of correlation between taking risk and reward.
Yep.
And that's seminal to kind of investing at an early stage as we do.
It is, and I think that obviously we've worked really, really hard to educate the marketplace that if you're going to invest in EIS, then the tax reliefs are fantastic.
Yep.
But it's not about the tax reliefs.
Absolutely.
It's about what you invest your money in and what you're ultimately going to get back from those investments.
Yep, absolutely. So within the portfolio at Deepbridge, we have 3 sectors that we invest in, and we always talked about our sector focus, and that's technology, life sciences, and renewable energy. The UK government over the last 12, 18 months has talked readily about economic recovery in the UK will be led by those 3 sectors. Is that because you're really foresighted and looking to the future, or is that just because it's common sense?
I think there's a common sense to it, but the world moves relentlessly in the direction of we talk about digitizing businesses and digital transformation, but the nation is also going through a digital transformation. So from a tech perspective, then there's some amazing things going on that are going to dramatically change how we do things and what we do, and we see it every day. And then certainly on the other side of the coin, a life science division, and life science is a broad term, but it's meant to be, because you can't put all your money into biotechnology.
Absolutely.
So you have to have a spread of risk across that. But some of the things we see in that sector are quite remarkable.
Yeah,
and I think COVID has actually, whilst it's been, not very
tough.
Pleasant for an awful lot of people, and tough for everybody, and more tough for a lot of people than myself in particular. I think what that has done is it's really highlighted the need for investment in life sciences, and some of the developments and the new ways of doing vaccines and different things is immensely important to the future. If we can, they're now talking about developing a vaccine that'll be a multi-coronavirus vaccine. So absolutely. None of this would have happened if coronavirus hadn't happened. Yeah. Certainly not in the timescale. So,
absolutely. Expedited massively.
So lots of amazing things going on. You have to take a global view of things. You can't be parochial and just say, hey, look at what's going on in the UK. It is a global view, and we do take that global view.
Absolutely, and I guess on the renewable energy side as well, I mean, can you just tell us a bit about kind of why Deepbridge got involved in renewables and kind of what the focus is? Yeah,
we were very fortunate early on to have a member of our team, Dr. Franz Hammerschmidt, a great guy, been involved in renewable energy before anybody got involved in renewable energy. Sadly for us, which set us back a little bit, is Franz unfortunately passed away, surprisingly. So it set us back a little bit, but we felt that our investor base, whilst we're excited about EIS and investing in what we did, but also they also had a need for a credible, less risk solution, and we got excited about renewables, and we have a separate renewables team, and we focused in initially on wind, and we have a substantial number of wind turbines, and we built a number of hydroelectric sites, and it is a stable base upon which we can continue to do the exciting stuff.
Absolutely. So talking about kind of the opportunities of today, we're in 2022. The world's a different place than it was 12 years ago when we started. As you alluded to, we've gone through the pandemic, etc. Kind of what are the kind of opportunities availing themselves to Deepbridge at the moment?
I think the world's a different place than it was about 4 weeks ago. But hopefully that won't go any further. But we'll see. But there's always something going on and something changing. But certainly opportunities for Deepbridge in terms of what we do and how we do it is looking at our existing portfolio of companies and helping those companies scale it. And when we say helping them scale, it's not just a case of putting the money in. It's working hand in glove with them, looking for opportunities. We've developed our relationships on a global basis. Just a week ago, I was with somebody who helps look after the Qatari royal family. So what are we doing there? I don't quite know yet. But there's an opportunity because we know they want to be a global tech hub. So how can Deepbridge investee companies work with the Qataris or whoever it is? Australia is a huge opportunity for us. Nobody does what we do in Australia. We've been very well received. We've invested in 4 companies, brought them to the UK. That's pretty unique. And we continue to develop that relationship in Australia with both federal and state governments and University of Queensland and others. And in fact, I'm going next week after 2.5 years. My wife thinks I'm going on holiday, but I'm not. So it'll be a good week. And then we're also looking at rekindling some of our connections in the US. In fact, our very first investment was a US company, and it was a spin out from the Palo Alto Research Center. So we want to develop that further. I think the opportunities for Deepbridge are huge to continue doing what we're doing in EIS, but also expand upon that into deeper tech.
Absolutely, and I think that's the key thing is that we are committed to the EIS market. We understand the benefits and the value of EIS, and I think as you alluded to earlier, why wouldn't we use EIS to support our companies? And at the same time, it's kind of why wouldn't investors use EIS when they've got the opportunities, because it's a world-renowned scheme.
I think it's we've looked at all the different schemes around the planet. EIS, SEIS, and to some degree VCT are without doubt the most significant tax-efficient products on the planet.
Absolutely.
I would say that for the vast majority, they are suitable, but not for everybody. And I think certainly in our time in EIS, so maybe 10 years now, I think there's been a substantial change in how people operate in that space. There are some excellent EIS managers in this country, and a lot of them we work hand in glove with.
I think that's a key thing, and I think it's a small industry, small subsector, but we do generally work very cohesively together. Just kind of looking to the future. What are your hopes, objectives, expectations for the next 12 months and maybe the next 3 years?
So to continue to scale the business, continue to build it. As you said, we're up to 50 odd people now. We've got. I love the saying that Louise Farley, our head of business development, comes up and she says we have a lot of companies that are heavily pregnant, and it's seeing those come to fruition, and whether there's mergers and acquisitions or NASDAQ listing or sales of those business.
Yep.
There's a lot of really interesting stuff bubbling under the surface. The hard thing for us and one of our skill sets is making sure we do that at the right inflection point.
Absolutely.
So that's good. We are looking to provide a methodology to follow our own investments.
Yep.
So we are looking at the possibility of more akin to an LP fund, possibly in Australia, the US and UK. Early days yet, but we're progressing down that route. I don't really see us doing VCT, but I may eat those words later. But
well, we look at it every couple of years, don't we? See what's out there and see the opportunities, and nothing has kind of taken our fancy as yet. So.
Yeah, no, we're driven by the ultimate return on investment and very successful businesses, not on the annual rate of return.
Yeah, absolutely. So I guess kind of as we've talked about where we've come from, where we're going, we've been extremely fortunate to grow a great advisor community of advisors and also kind of angel investors that support us and appreciate what we're trying to do. I guess that's been key to success today.
Oh, absolutely. All those hard miles running around meeting IFAs all over the country, knocking on doors for 5, 6, 7 years have paid dividends. I think articulating that message to IFAs that it's as much about the investment as it is about the tax relief has resonated really well with people.
Yeah.
And we have support from the list is endless of IFAs now.
Absolutely.
We communicate well with them. We report to them. They can pick up the phone and call me. But we have a really strong relationship with these people, and that's allowed us to grow to where we are today.
I think that's come from kind of you initially. I remember when I first met you and we talked about kind of what we need to do to grow the business, and I think my line to you is that we need to scale you and your kind of ethos on things. And one of the key things of that about is, I think 2 things is passion. We love what we do, we're passionate about what we do, and secondly is communication. And whether it's good news, bad news, anything like that, again, beginning of COVID, lockdown, etc. We made sure that we were communicating with advisors and investors about what we expected from our portfolio, what we were doing to support them, and I guess that's been key to kind of what we do as a business.
Yeah, I think scaling me is a key thing. I mean, obviously, I'm scaling myself at the moment, which is not good, but we've got some really good people here, and I try to pass on my knowledge and experience to those individuals. We very rarely lose people.
Yep.
So we have a great team. We have a fairly flat structure. We all communicate together. We go out together and socialise together. Yep. But we've got really strong people in each individual division, and the ethos of bringing into play business acumen, not just fund management acumen, stands us in really good stead when we're working with investee companies. I
think you're right. I think again, we've never come at this market from a fund manager perspective. We've always come at it as a business building perspective, and I think when you look at the US market as a whole, it's those companies that have that ethos that have really got the kind of the great reputation in the market, and hopefully, we're one of those. Yeah, well, look, the simple fact is that in the space we invest in, and at the time we invest in an investee company, then invariably things are not going to go exactly as planned. Absolutely. So unless you have experience on how you deal with things when things aren't quite going as planned, when COVID came along, we treated all our investee companies, and we treated ourselves almost like a turnaround. Yep. We said, okay, we don't know what's going to happen here. Absolutely. So we all need to tighten our belts. Yep. We need to extend that runway. Yep. And we treated everything like a turnaround. And I think it's common knowledge that we lost one company in that period. Yep. Who were directly affected by COVID. Yep. But apart from that, we managed all our businesses through that process, and Deepbridge as well. And in fact, we had a record year last year. Absolutely. No, good. Okay, away from work, kind of what are your interests away from work? Yeah, work kind of takes over more of my life. It's the kids. My kids play football, so I enjoy doing that with them. Obviously, a massive red, but not your kind of red. So I'm a Liverpool red. So I enjoy doing that. Yep. I enjoy my horse racing. Yep. I love to eat and drink, obviously by my physique, and my therapy is cooking. Yep. So I recently had the pleasure of meeting Rick Stein. Yep. And I introduced myself and I said, "You are my therapist." He looked slightly disturbed, but I love that. I love to travel. Yep. I get excited. I'm going to Australia on Sunday. Yep. I'm excited. I'm excited about getting on the plane. I'm excited about what I'm going to do when I get there. Yep. My wife's not excited because she's not coming. I was going to say, but I've seen your itinerary. It's definitely not a holiday, but yeah. Yeah. Good. And then kind of the question we ask all our guests on the Discovery podcast is the Deepbridge dinner party. So if you were to invite 3 guests for dinner, dead or alive, excluding family and friends, because we don't want to upset anybody, but who would those 3 guests be?
Oh, that's such a difficult question, but I think I'd like to invite certain people that I could actually watch the interaction.
Sure.
So I'd love to have Bruce Springsteen there.
Okay, yep.
The guy is a poet.
Yep.
I'd love to have Margaret Thatcher there because I'd love to see that interaction.
Yep.
And I'd love to ask her why she made us go to the Falklands, and
yep.
and I'd probably love to have Barack Obama there with me.
Okay, excellent. An eclectic mix, but an interesting mix. Yeah, it should be some interesting conversation.
Exactly. Well, there's no point bringing all your mates, is there?
No, absolutely. No, good, excellent. Well, thank you very much, Ian. Really good to catch up, and we look forward to catching up with you on future podcasts.
Super. Thank you.
Thanks, Ian. Thank you for joining us. If you have any topics you'd like us to discuss in future Deepbridge Discovery podcasts, please email us at discovery@deepbridgecapital.com. This podcast was brought to you by Deepbridge Capital LLP. Deepbridge is authorised and regulated by the Financial Conduct Authority. Please note that investments discussed are both illiquid and high risk and won't be suitable for all investors and should be considered as part of a diversified portfolio. The content of this podcast should not be construed as financial or taxation advice. We recommend investors seek appropriate professional financial advice. Any views expressed may no longer be current and may have already been acted upon.